Hi guys, welcome back to another new YouTube video. So it's currently 1:38 a.m. in the morning, as you can see, and I just closed off a huge trade. The best thing about forex trading is when you master the skill set and you can close off big trades like this. You can see right there, I closed off this trade, high probability setup, low risk entry points. Traders, for the past 4 years I've been trading the forex market, I've come to terms with this one factor. When you find a profitable setup, only and only trade that setup. Only that will help you stay disciplined, focused, and trading your own plan. Guys, I've seen this setup for the past 10 that I've been trading, and the fact that I'm trading gold, it makes me even more disciplined, because if I don't see my setup and then just jump into the markets, I'm going to be losing money. So see this. Anytime when I trade gold and I trade this setup, I make money. So, time that I don't trade this setup, I lose money. So this is the setup that I'm talking about. Traders, anytime when you see an uptrend market like this in the forex market, you need to understand that this is market structure. Price is going to move in a higher high and a higher low format for a period of time, and then after it's going to have to reverse at this zone right here. We are always going to have a breakout. Now this breakout right here, it's always going to indicate that now we are going to have a reversal to the downside. Now this comes with a huge candle that breaks out to the downside. As you can see right here, we had a big candle breakout to the downside. Now this candle, when it breaks, most of the time it's going to target a recent zone. A recent zone can be a support zone or a resistance zone, depending on the trend of the market that you're in. So right now we are in an uptrend and price is quite of reversing to the downside, meaning price is going to target a support zone. Since it's going to break out, it has to find support. Now as you can see, when price broke out here with a huge candle, it found support at this zone right here, and this is not just a support, this is also a major zone on the daily time frame. As you can see, traders, this is a demand zone. Reason why, anytime when you have price pushing up like this, and then you have a red candle, and then you have other green candles continuing to the upper side like this, it indicates that this is a demand zone, because this zone right here caused this upside move to the upper side. Remember, a demand zone is characterized by 1, 2, 3, 4 big huge candles. Now when you have price break from our market structure, which is the trend line right here, it drops and comes back to this zone right here. Now this is my main point of interest, finding a buy trade to the upper side. There are a few things that I always look out for before I take this trade. First thing, whenever price breaks out with huge momentum, it's going to create fair value gap, since the drop is caused by smart money. By smart money, I mean the banks. So the banks leave these fair value gaps in the market since the price drops huge. Now the first thing is price leaves fair value gaps. We have this fair value gap right here, and then we have this big fair value gap right here. The next thing, we always have to see momentum die off. Momentum has to die off because price has reached a support zone. So we see the sellers dying off, and anytime soon we are going to see the buy. And in this case, I want to see what we call divergency. This is our divergence. So anytime when we have this slanting edge, as you can see, we have price slanting here, price giving us a lower low and a lower low right here. On our indicator, we have here price giving us a lower low and then a high low, indicating that we are going to have a reversal back to the upper side. So divergence is one of the best signs to tell that price is going to reverse, because it indicates that momentum has really died off, and momentum rises off at a major turning point, which is this blue line that I showed you. Now the other confluence is the falling wedge. The falling wedge is a reversal pattern to the downside. So when you see a falling wedge appear after price has dropped for a period of time, and this is happening at a turning point, it indicates that price is going to reverse. So this is a second confluence I always love to look out for, as you can see. So a falling wedge, you have to have this lower part sloping and also this lower part sloping, indicating that we're going to have now price break and retest. So traders, this is our 1 hour candle. So I'm going to jump into the 15 minutes time frame for me to see now the break and retest. My entry strategy is always break and retest, guys. I want to see price break and retest, and it has to break a major zone. Now I look out for a major zone in this pattern right here. So a major zone is this part right here. So we want to see price break and retest this zone right here, because this zone right here is acting as a support and resistance. Reason why, you can see here price acted as a support, and then here it's acting as a resistance. So meaning this is a very important zone that when price breaks it, it's going to bounce off it and then shoot back to the upper side. Remember, we are targeting for this fair value gap as our target. Now traders, as you can see clearly, we had price break our trend line, which is the falling wedge, and then after push up, fake out multiple times. As you can see, we had fake outs. This is the 15-minute time frame. So we have multiple fake outs, as you can see here, and then price drop back to the downside right here. So what I did is just draw out a trend line, to give price more structure, as you can see. So we had price bounce off here, and when it came back to our resistance zone, it broke it and retested it properly. As you can see right here, every candle closed above our price. This is what we call a break and retest, traders. And after this, you always take your trade, and you have to note the time. This was the New York market opening. So we had price now shoot back up, targeting this fair value gap right here, and then also it tapped into this zone right here, and it's going up to fill up this fair value gap right here. Now, one key thing to give you more confidence that price is going to always go your way. The way price comes down, it's most of the time the way price goes back up. I'm going to repeat this. The way price comes down, that is sometimes the way price is going to always go back up. If price came down aggressively, as you can see, we have 1, 2, 3, 4 big candles. That's the same way sometimes price is going to go up. Look at this, 1, 2, 3, 4, 5, 6 candles shooting back to the upper side, as you can see. So that is how price does its thing. Because when you look at the daily time frame, guys, look at this. So you can clearly see this was a huge candle on the daily time frame. Price broke out. This other candle opened, and it's just started shooting back up to go back and fill up the fair value gap that was created by the daily candle, as you can see. So this is why price has to go back the way it came down. Now, traders, as you can see, this is the beautiful trade that I took, as you can see right here. My targets are still valid. This was a high probability setup. Low risk entry points. There's no time where price went back and took me out. Even though when we are trading the forex market, you have to make sure to use a stop loss and a take profit. That is a must. But when it comes to placing a lot size, I can place whatever lot size that I want. I don't really care about what other people say. Use proper risk management. Yes, I use risk management, but when I trust my strategy, I'm going to trade the way I want. Because whenever you listen to other people, guys, it's always going to get to your head, as you can see. But remember, for you to be successful in trading in the forex market, you have to be trading one single pair, one single setup. This setup, I've seen it for quite a period of time. Trade only one concept. Please and please trade only one concept. Like, this is a very easy concept that I trade anytime when I know market structure is about to shift. Anytime when we are shifting from an uptrend market like this and price is coming to a downtrend market, expect a breakout first, and then price has to pull back. It has to pull back. That is a must. Price has to pull back to retest the trend line that has broken. That is a must. If price has been in a downtrend, it's going to always break out. It has to break out and then come back and retest. It has to retest the trend line that it has broken. Remember, anytime when a trend line or support resistance is broken, just like this, if this trend line is broken, it indicates that this trend line was support. It's broken now. It's going to become resistance. Price has to come here and reject this part right here, indicating that we have no more buyers in the market. Sellers are coming back into play for price to change to the downtrend market. That is how price moves. And this doesn't mean that price is probably going to reverse. Sometimes it can be a fake out, Sometimes. That's why it's always advisable to trade what you see. So don't trade what you think in your head. But when you see a setup that you understand you have seen for quite some time, trade it. Like the setup right here. Literally, I need to be able to see this setup in the first minutes when I open my computer. If I don't see this setup when I'm trading gold, I'm going to ignore gold. Unless when there's another profitable setup that I trade and I've seen it. But this is one of the easiest setups that I've seen. Literally, everyone who traded gold today, I think they made money because this is a very easy setup. Like, traders, only trade easy things. Stop trading hard things. Like, trade only easy things. You can see, guys, how I've juggled from the 4-hour candle to the 1-hour candle to the 15-minute time frame where I took my trade. Because you're putting your stop loss just down here. Look at this. You're putting your stop loss right here, which is very tight. This stop loss was not even 20 pips. And you're targeting over more than 50 pips with this fair value gap that was up here. Even though you use a big lot size, traders, this setup has always played out the best. I've only made money when I'm trading setups that I've traded for a period of time. And I've only lost money trading things that I've not traded before. That is how money is made in the forex market. The other thing is the reaction. Your reaction when you're placing your trades. Most people, when they place trades, they freak out. But me, I don't freak out because I've been in this game for over 4 years and I'm learning every single day, guys. My main aim every time I'm trading is to learning as I'm making money. So traders, if you enjoyed this video, please apply this trading concept onto your strategy, guys, and see if things will work out for you guys. God bless you, and I'll see you. Peace.